Is your money just sitting there earning next to nothing in a regular savings account? What if you could make your savings work harder for you safely and predictably? That's exactly what we're diving in today. By the end of this video, you'll understand how term deposits can be a smart, low-risk way to boost your savings and whether they're the right fit for your financial goals. We'll cover what term deposits are and who offers them, how you get paid by investing in term deposits, pros and cons of investing in term deposits, and at the end of this video, I'll be sharing if this is a good investing option for beginners. So let's get started. Have you ever wished you could get a guaranteed return on your money without the roller coaster ride of the stock market? Well, there is a simple financial tool that does just that, a term deposit. Imagine you have a lump sum of money, say for a future big purchase like a car down payment or a home renovation. Leaving it in a standard savings account might earn you very little, barely keeping up with inflation. You want a better return, but you're not comfortable with the risks of investing in shares. This is where many people feel stuck, wanting growth but prioritizing safety. A term deposit, also known as a fixed deposit or time deposit, is essentially a savings account where you lock away a sum of money for a set period, like 3 months, 6 months, or even a few years. In return for agreeing not to touch your money for that term, the bank or financial institution pays you a fixed interest rate, which is typically higher than what you would get from a regular savings account. Think of it as lending your money to the bank for a specific time, and they pay you for the privilege. These are widely offered by almost all banks, credit unions, and building societies. So you've put your money into a term deposit. How actually does that money turn into more money? It's not magic, but it feels like it when you see your savings grow without lifting a finger. Unlike the daily ups and downs of other investments, term deposits offer a clear path to how you earn. But how does the interest actually get calculated and paid to you? Is it a big lump sum at the end, or do you get regular payouts? With a term deposit, you earn interest at the agreed upon fixed rate for the entire duration of your chosen term. This interest can be paid out in a few ways. The first one is at maturity, which is the most common way. Your initial deposit plus all the accumulated interest is paid to you as a single lump sum when the term ends. The other option is that you get a periodical payout. Some institutions offer options to receive interest payments monthly, quarterly, or annually directly into a linked bank account. This can be great if you need a regular income stream from your investment. The longer the term and sometimes the larger the deposit, the higher the interest rate you might receive, as you're giving the institution more certainty with your funds. Term deposits sound straightforward, but like any financial product, they have their strengths and weaknesses. Understanding both sides is crucial to deciding if they fit your financial picture. On one hand, the idea of guaranteed returns and safety is incredibly appealing, especially in uncertain times. Who doesn't want peace of mind knowing their capital is secure? But what about the trade-offs? Is there a catch to this seemingly safe option, and could you be missing out on other opportunities? Let's break down the pros and cons. Let's look at the pros first. The first one is safety and security. Term deposits are considered very low-risk investments. In many countries, they are even protected by government deposit insurance schemes up to a certain amount, like $250,000 per account holder per institution. This means your money is safe even if the bank fails. The second pro is guaranteed returns. You know exactly how much interest you earn from day one, regardless of market fluctuations. This predictability is a huge advantage for conservative investors or those saving for specific short to medium-term goals. The third pro is simplicity. Term deposits are easy to understand and require minimal ongoing management once set up. The fourth pro is financial discipline. Since your money is locked away, it can prevent impulsive spending and help you stick to your savings goals. Now, on the con side, one of the biggest drawbacks is limited access to funds. If you need to withdraw your money before the term ends, you will likely face penalties, which can mean forfeiting some or all of your earned interest. The second con is lower returns. While higher than standard savings accounts, term deposit rates are generally lower than what you might achieve with higher risk investments like stocks over the long term. They often struggle to keep pace with higher inflation. The third con is inflation risk. If the inflation rate rises above your fixed interest rates during your term, your purchasing power can actually decrease, meaning your money buys less at the end of the term than it did at the beginning. The fourth con is lack of flexibility. You can't make additional deposits once the term deposit is established, and you're locked into the initial interest rate, even if market rates increase significantly. So, are term deposits right for you? If you're looking for a safe, predictable place to park your money for a specific goal within a short to medium time frame, and you do not need immediate access to those funds, a term deposit could be an excellent option. They offer peace of mind and guaranteed growth, making them a solid foundation for any financial plan. However, if you're chasing higher returns, need constant access to your money, or are investing for the very long term, you might want to explore other investing venues. The key is to weigh the security and predictability against the liquidity and potential for higher growth elsewhere. Always compare rates from different institutions and consider your own financial situation and goals before committing. Now, is this a safe option for beginners? Well, this is one of the least risky investments, and therefore, if you understand that the money will be locked for a set period of time and you don't need that money, it's a very predictable and safe investment for beginners. If you found this video helpful, give it a thumbs up, subscribe for more financial insights, and let me know in the comments what other investment topics you'd like me to cover. Your financial journey is unique, and understanding all your options is the first step to building lasting wealth. Thanks for watching, and check out the next video to learn more.